let's talk about a different type of commodity now. Fourth quarter earnings season unofficially begins after the bell today when aluminum giant Alcoa comes out with its numbers. And they are expected to show a fourth quarter profit of 6 cents a share thanks to higher metals prices. The profit at Alcoa would be the second straight after 3 quarters of losses. Charles Bradford is analyst and partner at Affiliated Research Group in New York, and he's here with us in the studio right now. And Chuck, we should say that even though the consensus of analysts surveyed by Bloomberg is 6 cents, you actually think Alcoa is just going to break even. Why?
The main difference is taxes. I mean, it's pretty clear the aluminum price was up 7 to 8 cents a pound in the quarter compared to the third quarter. Currency went against them. That probably wiped out half the gain, but still a gain. But they were losing money earlier in the year and had a tax credit. With the profit in the fourth quarter, they may have to make up for some of that credit and have an above normal tax rate. And that's what affects the number. Now, all this is short term because you won't see that kind of a problem in 2010 when they ought to do a lot better. And in fact, I've got an above consensus earnings estimate because the metal price is up another 15 cents from where it was in the fourth quarter. So we've had a run.
And how do you think the numbers from China today, we had imports up, exports up. How do you think demand from China is going to shape up, and how will that feed into aluminum prices?
Well, one of the reasons that aluminum prices have gone up so much is stories about really bad weather in China, power shortages. I saw some pictures where the snow was 2 stories high. Literally. This is the worst winter in parts of China in 40 years. Now, last year was the worst winter in 50 years. It's sort of a funny story, if you will. But the story going around was that electric supplies were being cut. To supply the consumer, they cut off industry. And a lot of industry was working 3 days a week instead of 5. Aluminum is a big power consumer, so a lot of people have been believing that there's going to be a shortage.
Chuck, your Alcoa estimate, that is before the break-even number you say, that's before a charge related to the Italian smelters. How's that going to play into this?
Well, the Italian smelters, they said, would cost them $300 to $500 million. Take the midpoint, it's about 25 cents a share. So the reported number would look like a minus 25. Now, that's a non-recurring item, so most analysts take it out.
And it's something that the company has talked about as well.
Yes, and they put out a press release.
Now, getting back to China for a moment, there's been all this talk of a shortage. I guess the question is then, if output actually turns out to be higher than expected out of China, that could cause a big correction in aluminum, couldn't it?
Well, even worse than that is there are 2 gigantic plants being energized in the Mideast as we talk. Now, it takes 6 months to get these things fully up and running and the metal up to the right quality. But these are the equivalent of 5 normal-sized plants. So there's a huge amount. I don't see anybody mentioning these plants. They are just huge, and that's where the big supply is.
So what effect is that going to have on the aluminum price going into, say, the second half of the year?
The second half could be a lot weaker, but there's a third problem. The third problem is the inventories at the London Metal Exchange are mostly part of financial agreements. If interest rates go up much, if the contango or the forward curve flattens out, all this stuff could come out, and there are a couple million tons of this.
So
it's
we're
huge.
talking about speculation that's in the London market. Is that what
financing.
You're saying? Okay.
People were able to borrow money against the difference between the spot price and the far-out price. With low interest rates, you can finance it very easily.
But you are seeing the demand side start to improve, are you not?
Cyclical companies do well when the economy does better because demand picks up. Yes, absolutely.
Well, by how much? Is it something that at least going forward, let's try not to go too far out, but what about this quarter?
The demand side is very slow at the moment. Because, for example, one of Alcoa's biggest products is sheet for beverage cans. People drink beer and soft drink more in the summer than they do in the winter. So that's a problem. Construction is very slow in the winter.
So given all of this, why are your estimates higher for Alcoa than the consensus for the rest of the year?
Well, it's really where the metal price is today. It's about $1.05 a pound. It probably was 88 cents on average in the fourth quarter. That's what drives it.
So this oversupply might not start to affect Alcoa for some time, and the aluminum price for some time. Okay.
And the new supply from the Mideast takes 6 months.
So at least for
next couple quarters, we're okay.